Dubai, one of the fastest growing cities in the world. Here, skyscrapers rise faster than building permits are approved elsewhere. Over the past decade, its real estate markets have shown exceptional growth, but is it sustainable? In this video, we break down: is Dubai still a smart investment, or has the opportunity passed? What is Vision 2030 and how might it reshape the entire economy? Why is Dubai investing billions not in oil, but in tourism, tech, and even agriculture? By the end, you will understand what Dubai truly represents for modern investors. To understand Dubai, you need to look into its past. Back in 1960, the city had a population of just 40,000 people. The main sources of income were pearl diving and fishing. Everything changed with the discovery of oil. The oil industry sparked large-scale investments in infrastructure, roads, ports, and the first buildings. However, by the late 2010s, oil's share in Dubai's GDP had dropped to less than 1%. This isn't just a static, it's a proof of a deliberate decision by the government to move away from resource dependency and actively develop new economic sectors. Today, the Emirates' economy stands on 5 main pillars: trade, logistics, tourism, real estate, and financial services. This shift wasn't caused by declining demand for oil, but by a strategic choice made decades ago and continuously reinforced through modern policy and investment. By the way, if you are interested in investing in Dubai's high-end real estate that's more than just property but a working business model, visit our Instagram, link in the description. Many still remember the 2008 crash and wonder, is history repeating itself? But Dubai's real estate market in the 2020s is operating under entirely different rules. First, the growth drivers have shifted. Instead of speculative flips, today's demand is backed by real migration trends, rising incomes, and policy reforms. From 2021 to 2024, property prices in key areas like Dubai Hills and Palm Jumeirah rose by over 75%, not randomly, but alongside a surge in expats and global capital inflows. Second, the market is far more transparent. All the transactions go through escrow accounts, most processes are digitalized, and development is tightly regulated by the government. That obviously adds confidence for both private and institutional investors. And let's not forget taxation. No property tax, no capital gains tax, and no tax on rental income. That's rare in today's global investments landscape. To understand why Dubai keeps growing, look at the strategy behind it. Vision 2030 and Agenda D33 aren't just slogans. They are government-backed roadmaps with strict timelines and budgets. Vision 2030 aims to eliminate oil dependency and transform the UAE into a hub for technology, tourism, and global trade. By 2030, the targets include more than 90% of GDP from non-oil sectors, hundreds of thousands of jobs in tech, fintech, and creative industries, 7 trillion in global trade volume. Agenda D33 adds the execution plan, doubling Dubai's economy within a decade, attracting more than $150 billion in foreign investments, and launching over 30 economic accelerators, from R&D clusters to digital expert platforms. And this is already in motion. In 2023 alone, over $35 billion was invested in non-oil sectors, nearly half in tech. This isn't just urban growth, it's the design of a future-proof economy. Though dry and sandy, Dubai is investing heavily in agriculture to boost food security and tech innovation. Projects like Botanica, the world's largest vertical farm, produce over 1 million kilos of greens yearly with 95% water savings. Supported by more than $100 million in funding, the agri-tech sector is expanding with hydroponics, smart greenhouses, and R&D hubs. This isn't just about food, it's economic diversification and resilience in action. By the way, Dubai welcomed over 17 million tourists in 2023, placing it just behind Paris and London. despite lacking centuries-old landmarks or historical monuments. What sets Dubai apart is that tourism here isn't just about sightseeing. It's a year-round, strategically developed industry. Tourism has been a core focus of government planning for decades, with consistent investment in world-class infrastructure, entertainment, and cultural experiences. From luxury resorts and global events like Expo 2020 to theme parks, desert adventures, and high-end shopping festivals, Dubai has positioned itself as a destination with something for every demographic. Crucially, tourism doesn't operate in a vacuum. It directly powers growth in real estate, hospitality, retail, transportation, and public infrastructure. It creates jobs, boosts demand for residential and commercial properties, and drives consistent cash flow into the city. With tourism contributing approximately 12% of Dubai's GDP, it acts as a stabilizing force for the wider economy. The continuous flow of international visitors sustains both short-term rental markets and long-term investment strategies, making tourism not a side effect of development, but a core pillar of it. When global investors consider real estate, they often compare Dubai with major European capitals like Paris, Berlin, or London. On the surface, these markets seem mature and stable, but in practice, Dubai now outperforms them across several key metrics. Rental yields. In Dubai, returns on rental properties average between 5 to 8% annually, significantly higher than the 3-4% typically seen in European capitals, and that's before accounting for value appreciation. Taxes. Dubai offers zero property tax, no capital gains tax, and no income tax on rental earnings, enabling much cleaner, more predictable passive income. In contrast, Europe is tightening fiscal policy, adding wealth taxes, increasing property levies, and enforcing stricter rental laws. Dubai's real estate market is known for its streamlined, tech-driven processes, blockchain-backed land registries, escrow protections, and transparent government oversight allow deals to close quickly and securely. In Europe, deals often stall in bureaucracy and legal delays. While cities like London and Paris grew organically over centuries, Dubai was built internationally for the future. It offers ultra-modern transport, 2 major international airports, smart city tech, and expanding digital public services, all with urban planning that supports investor-friendly development. And let's not forget quality of life. Dubai is doubling its green space, expanding pedestrian and cycling areas, and building over 100 kilometers of new public beaches. Add to that top-tier schools, healthcare, and safety, and you get a city not just to invest in, but to live in. In short, while Europe tightens taxes, Dubai opens and scales. For today's global investor, that's more than a competitive edge. It's a structural advantage. So, as you see, Dubai isn't riding a speculative wave. It's executing a long-term vision where each building, district, and reform is part of bigger plan. Real estate growth is structural, tourism is foundational, and Vision 2030 is already becoming a measurable reality. For smart investors seeking yield, security, and momentum, Dubai isn't just relevant. It may be your best bet on the future. If you're exploring elite real estate investments with true business potential, follow our Instagram, link you'll find in the description, and see what's possible in Dubai today. See you soon.